Day 3, how to buy stocks for beginners. It's your boy Zay. We about to dive into it. If you didn't see the previous day 2, we talked about common stocks versus preferred stocks. You have to go check that out because you need to know what are you here for, what you're investing for. But let's get to day 3, man. How do we buy some stocks, man? Start making some money on. Fun fact, off the record. They say you don't make money when you sell stocks. You make money when you buy stocks. I'm gonna let that sit with y'all. I ain't gonna tell y'all why just yet. All right. Choose a brokerage account. To buy stocks, you need a brokerage account. I broke down brokerage accounts in day 1. If you didn't see that, go check that out. To buy stocks, you need a brokerage account. Brokers act as intermediaries between you and the stock market. Okay. Online brokerages. You have Robinhood, E-Trade, Fidelity. So we covered these earlier in day 1. Offers easy access with low fees, making them perfect for beginners, right? I think Robinhood, I'm pretty sure, is feeless. So they make their money within the spreads. People don't know that, but that's how they actually make their money. Some brokers offer zero commissions trading, meaning you don't pay extra fees when buying or selling stocks. So that's Robinhood for sure. So, but obviously they gotta make their money somewhere. They are a business, so let's not just, let's not, you know what I'm saying? But these are brokerages. So like I said earlier, just a brief overview. Brokerages are basically like the bank accounts for buying and selling stocks. Depending on what broker, some have futures trading and some have crypto trading. So that's all. So let y'all know, it's the bank account for buying stocks. Decide on the type of account. Individual brokerage account. Best for most people. Allowing you to buy and sell stocks freely. It's taxable on any profits you make. And do you have retirement accounts? Offers tax benefits but limits when and how you can access your money. A good choice if you're thinking long term. Okay. Individual brokerage accounts is the ones you can make your quick decisions, right? So usually individual brokerage accounts are usually where you're going to be looking to trade usually for a living. So if you want to trade or invest for a living, you kind of want to live off, not necessarily, it just depends on how you want to go about it. But if you kind of want to build your money and have access to it whenever you want to, you're going to choose an individual brokerage account. So say for instance, if we invest in Google in 2015 and we want to sell some of our Google in 2020 because we about to go buy a house or we about to buy an investment property or whatever the case is, we want an individual brokerage account. Now, if we're trying to put money into a certain stock and we know that stock is going to be around when we're 65 and it's time for us to take our 401ks and our IRAs out or whatever, that's when we use the retirement account. So we put the money into the retirement account because we know I'm not looking to touch this money at all whatsoever. This money will be here. But you can't touch it. The thing is, you cannot touch this money. If you want to liquidate this money early, you have to pay taxes on it. You get a 10% penalty tax unless they increase that as well. So you cannot take no money out of this account, or you're going to get taxed so hard that it doesn't even matter. All the money you made is for nothing. But it's tax free when you retire. So it's just a way to look at it. That's all. It's a way to look at it. All right. Fund your account. Transfer money into your brokerage account via bank transfers, debit, or even a wire transfer. It's important to start with an amount you're comfortable with and make sure you're not investing money you might need in the short term. All right. You're supposed to only invest with extra money, right? Now, you might say, bro, my extra money on it, like $20, $40. I'm not going to be, I want to be a multi-millionaire. I want to hit 10 million, I want to hit 100 million. My little $50 a month ain't gonna make me no 100 million. That's when we start talking about business, right? So I don't care how good of a trader you are, you're not turning no $40 into no $100 million in 2 years. That ain't. You could be the best trader on Wall Street, and that's not happening. So money in is money out. You get what I'm saying? So we have to start looking at increasing your income. You can hit whatever. If you want to become $100 million, if you want to become $100 millionaire, a billionaire, whatever the case is, you can hit that for sure. If you want to hit it, you can hit it. But it's going to require your money in, which means you have to make a substantial income to make more money in this. But this game is amazing because once you learn it, you can't unlearn it. You know what I'm saying? So all in all, make sure you're investing with extra money. Now, if you only got $20 to invest, now we got to start looking at, can we cut down our debt and cut down whatever we got going on, or can we make more money? That's the only two options you can. But do not invest with money you need, because you ain't gonna get when you need the money, when you need the return, you ain't gonna get it. I promise you that right now. You might get every once in a while, but you go drive yourself crazy because this ain't no gambling sport. Okay. Select stocks to buy. Research companies, look at their financial earnings reports and growth potential. Use tools like Yahoo Finance, Google Finance, or your brokerage research tools. Start small. For beginners, it's smart to start with established companies, Apple, Microsoft, or ETFs, exchange traded funds. Now, I was telling you earlier about SPY or the S&P 500. That is a fund. So basically, that has a basket of the top 500 companies, basically. And basically, with these companies, they basically are used to track the stock market, but they have an average annual return of about 10%, about 8 to 10%. I just like to say 10%, good, nice round number. You know, human psychology and all that good stuff. So you invest in a basket of stocks. So I recommend everybody that starts off to just buy SPY and learn the game. Please do not go buy some stock you never heard of. Don't go buy Foo the Boo, Boo Boo the Fool. You know what I'm saying? Don't go buy Wallpopper. No, let's not go buy those things. Let's learn the game. Let's just buy SPY. Let's learn the game. Now, if you learn the game and you know how to do your research and you like, bro, this company's undervalued. This company has made 200% return on sales and revenue. Its profit margins is 40%, and nobody, people sleeping on this company. All right, then, we'll make it move. As long as you know proper risk management and all that, I'm not mad at you. But let's start small. The researcher companies, they have tools like Yahoo Finance, Google Finance. Now, personally, my favorite is Yahoo Finance. We got that pulled up right here. So, Yahoo Finance lets you know everything you need to know. So, if you want to look at the fundamentals, now earlier we was looking at the technicals, right? So we got Apple. Look at the technical. This is the charts, the bar charts, right? Zoom in, we can see all the price data for the day. Okay. Come to Yahoo Finance. We look at the fundamentals of it, so we can actually see what the company makes and everything, bro. So we were like, I wonder how much they make. Like, yeah, you can actually see. If you come into this, you can do all this. You can go to news, research. You can see even the charts right here, the statistics of the company, everything. So I like statistics a lot. Statistics, I have like a blueprint that I go over, and I can just quickly go through the statistics of it. So we can click here. And market cap 3.46 trillion, enterprise value 3.50 trillion. So a little bit overvalued compared to its market cap. Trailing PE, 37.83. So that's just price and earnings. So that's just if the forward is lower, then they expect it to basically increase in value in the future. So that's a good thing that the forward PE is lower. Okay, so we have probability margin. So over a 23% profit margin, anything over a 10% is good. A 20% is amazing. And we can show you a company like Microsoft, they have a 40%. 40% is insane. If you put $1 into something, and every time you put $1, you got 20 cents, that'd be amazing. So imagine if every time you put $1 million in, you made 20,000. Every time, like, somebody gave $1 million, I made 20,000. I'm like, all right, bet I'm gonna put the 1.2 million in, and I make 500, whatever. Like, that's amazing. So imagine a 40% profit margin. That's why these companies are so amazing. All right. Return on assets 20% is absolutely amazing. That just means the return on the assets that you are have in the market, and the return on equity 157% is that's ridiculous. That's because 20% you want that number right here to be 20%. So that's ridiculous. So you got the revenue. The revenue growth is usually when people look for. They usually want to see like a 25% growth year over year to the quarter. Same with the quarter earnings. Now the earnings was down 35%. So compared to this quarter last month, we actually did worse in earnings. So we have to see why. That's when we start doing your research to see why we did that. Total cash 65 billion. Total debt 119 billion. So we had to look at our free cash flow too, because that's everything's different. So you gotta look. There's more in debt than that. So let's see. We go to the financials now. Then we want to look at our cash flow. You got the free cash flow. So as you can see, the free cash flow is 108 million. So the 108 million compared to the whole total debt of the business, we actually have more cash than the actual whole total debt of the entire business. So let's go back to statistics. Remember that was 108 million in free cash flow, and the total debt is 119 million billions. Oh my God. Yeah, no, never mind. I lied. I lied, but all in all, it's doing amazing. Oh no, I think that's to the million. So I think it is 100 billion. I think it is because I'm pretty sure if I'm not mistaken. If we go back to cash flow, all numbers in thousands. So that's 108,000 million. So that's basically 108 billion, if I'm not mistaken. If I'm wrong, correct me, but I'm pretty sure if we do 108 million times 1,000, then that would give you 108 billion. So just wanted to put that in the air. All right. This is basically your fundamentals. This is Yahoo Finance. This is how you use it, become real good in the debt, and learn your system to find good stocks. All right, and the last bad boy here. Place your order. Market order buys the stock immediately at the current price, at the current market price. Ideal for beginners who want to get in right away. Limit order sets a specific price at which you're willing to buy. If the stock market hits that price, your order will execute and review and confirm. Double check the stock ticker, number of shares, review and total costs, including fees before. So this is how you place your order. I want to quickly just give you an overview on the charts on how we can do that. So market order, right? All right. So if we were say we were in a trade, right? We can do the bar replay. We can get back here. So right. All right. Say we're in a trade, right? Or we want to get into a trade. I'm gonna give y'all a couple examples. A market order. So say for instance, I see this happening. I start to see this play out. So high, low. We start getting this range. So right here, all of this is consolidation. All right. So we can mark from like let's see here, like here to here. We got the high. So we got the high here. So here to here. Sharpen up a little bit. All right, boom. This is in a range. It's kind of bounced back and forth between this range, right? Now, if for instance we were like, all right, we see this nice green, this nice close consolidation here, we could possibly go back up here, right? So we could possibly hit back up here, or we could fall, right? But I see this nice candle close, so I believe we're gonna go up. All right. So what I'm gonna do is I'm gonna hit a market buy because I want to get in immediately because I feel like the price, the way it's moving, might hit there fast. So I'm going to make a market order. So if price is at 228.22, I'm going to buy at 228.22. So that's a market order. I'm buying right where the market is at. Now, a limit order, how are we talking here? A limit order sets a specific price at which you're willing to buy, right? So if we come here and I'm like, all right, I feel like this is a little bit too high. I don't want to take that risk of buying here and then it falls back to this support level, even back here. I am going to set me a limit order for let's say right here, right? So we're going to say, and I want to buy only when price, if I can click that and delete it, I only want to buy if price comes back to this level. I like this level here. It's a good support level. Let's say like here. I like this support level here. So let's say here, right? A lot of touches here. I like the support level. So if price comes back to here, I want to buy. So let's see if we come back to this price. I actually don't. Okay, so it does. So we bought here. And we have our stop loss at this swing low, right? Now, I don't know what the hell this trade gonna do. I'm just giving y'all an example. So if we lose, don't get on me. But so we could buy limits here. So we didn't buy here, and if we bought here, we'd have been instantly down. But what the limit orders do is like, okay, this is a strong price level, and people will usually buy this price level, so we're gonna buy here to lower our risk of the trade. So instead of having a risk of 3%, we only have a risk of from 1 to probably like what 2% and 1.5%. So then we boom, and then we want to target up here. So our profit target would be up here, right? Okay, that would be our profit target. Let's make that green. So we limit here. So somebody bought here and they're already down, so they're sweating. I just bought here, and it might come down more, but it ends up going up. And it respects. See how it respects this line? Keep this in mind. Now I just made this from back here. Y'all see I connected it to back here, this level here. That's how support and resistance work. We ain't even get there yet. So we come back. Boom. We made a limit order. So we bought as soon as price got to 225.88. We bought immediately here, right? So that's when this white candle happened. So I'm up. I came down just a little bit, not even a few cents. Then it bounces back up, and the candle goes. It goes up, so it starts moving towards our target. And it comes back and it bounces to the line. To the line, it bounces. Then again. So after you see this, you have strong conviction in your trade. Now you can start to lower your risk. So you can trade your stop here. We got a swing low here. We know that it's starting to move up now. Or you can even move it up here. It depends on what your risk management is and all that. I have a certain risk management when I'm trading, but that's me. So we move to this swing low right here. So the reason why is the swing low, it pushed down and then it pushed up. So this is a strong demand zone, right? Simple. Real simple. Hits it again, then it starts to move up. Boom. Hit our target, right? It's that simple. Trading is that simple. As long as you can manage your risk, you can make some good money. And we broke out this time. So that's how simple it is. Limit orders, right? That's limit orders. And after that, just review and confirm. Make sure everything is right. Make sure you're buying Apple when you're not buying Bitcoin, for example. Make sure we're not buying Bitcoin. Make sure we're buying Apple. So that's pretty much all we're talking about here. All right, so let's delete all that. That's pretty much it. So we're going to see y'all in day 4. Appreciate y'all for tuning in.